Hey guys, welcome to In Between the Tees. On the first tee today, we do have some special guests. Sarah to the left, and right in dead center middle, we have Erika. And they are coming to us from the Financial Architects, and I couldn't be more happier to have them on the show today. They're going to share some great insights of not only preparing for some tough life events, but also going to go ahead and talk to us about preparing for a legacy for your kids and providing stability financially, and maybe even dropping some golden nuggets of financial literacy. So today, please stay tuned, and I'm excited to bring some of the topics we have today. So ladies, thank you first and foremost for coming in today. I know it's a bit of a travel. You trekked traffic from the IE, and it's never the easiest. So thank you so much.
Thank you for having us. We took the carpool lane, so
she was driving. I was sleeping.
She was sleeping.
You was taking it
Yeah, I was preparing for this.
That's awesome. You were blueprinting what things we were going to say, so this should make things a little bit easier.
She was meditating on financial literacy.
Hey, listen, I think that's going to be a calming thing for not only you, but also for anybody that may be watching today. You know, meditation is key, and also being able to have a mind on finances is even today, right now, in this world that we're dealing with. So
agreed.
I want to go ahead and kind of dive in with you guys today. Maybe if you would want to go ahead and tell us a little bit about yourselves and how you got into the financial architects, and just kind of expand on your experience.
You want to go ahead?
Okay. So I've been with the financial architects since the CEO started the office. I was one of the original brokers, so I'm kind of like an OG broker with the financial architects. Okay. Yeah, so it's been almost, I think, 8 years.
8 years.
Yes, and we've grown so much. We went from one little office. We've kept expanding from that, getting a bigger office, then more agents and more agents. And now we're up to, I don't even know how many agents. I see so many people getting licensed now, especially from the real estate industry. They're getting licensed, to add this to their tool belt to offer their clients. So I would say we have 150 agents. Last I heard.
150.
Yeah, 150.
Wow.
So yeah, I've been since the original. So I'm proud of that.
Yeah.
It's not a easy industry to be in. So I'm still here. I'm still trekking along.
So you are the cause of the wildfire of the financial architects.
Yeah, I would like. Yes, I sure am.
Definitely is. Definitely is.
Is that how you two were able to plug in together? You guys.
So I got plugged in with Erika when I joined TFA, the Financial Architects. But prior to that, I was doing fitness. So I was very much into that. That was the route I wanted to go to until, COVID hit, hard times, everything. Yeah. People started really shifting, careers and things like that. So that's when I got licensed, and I realized, this is very important stuff we're learning here. This is actually helping families. This is information that my parents don't know. I don't know. How am I going to help my parents? We're immigrants, so how am I going to help my parents if I don't even know this? They don't know this. So who's helping us, So I think that's when I really got into this industry, and I, got interested in it. So I got licensed, and then I met Erika, and we just stuck like two peas in a pod.
She clung to me really quick.
Yeah, so.
and I receive it. I was very glad to receive it. I love to help somebody build a buzness.
So she was almost like your mentor then.
Yeah, she's definitely been there. Yeah, I'm like under her wing, and I really like, she's, like I said, she's an OG, so she knows everything. So I'm like always listening, paying attention. Okay, what is this? Always learning, right? So. I'm very grateful for that.
Aww,
that's awesome.
I just love her.
I know when we met at the EXP events in Chino's at Los Serranos golf course, you two were in the same car riding together, and I was like, you guys are two peas in a pod. So
causing trouble.
It makes sense. And it's always good to have a mentor. And I feel like even what I do, I had to latch on to someone who could provide me not only guidance, but be right next to me. If hey, what's this about? Hey, like, can you chime in here where I'm coming up short? So I think you guys are a really good mix together. I always see you guys on each other's social media.
Yes.
It's pretty cool to see you guys doing your thing.
Thank you.
Thank
you. I think that it's an important thing. Were you a client before, or were you just signed on?
Yeah.
How did you hear about TFA?
Yeah, so basically, well, I actually came from other companies in the financial industry. Yeah, so companies.
Would you like to name those
companies? Sure. So I came from companies like PHP. That one was like a quick second. Then moved on to WFG.
Okay.
That was like a couple of months, didn't last, and then now then went on to TFA where I found my home, and I'm very happy there. So.
Got it.
Yeah. So I was, I jumped around a little bit, got to see like what I liked, what I didn't like. I'm very big on, serving my clients, bringing value to them, and doing what's right, not because the numbers look good, but just because of the smiles I receive. So, so I've just found that TFA was giving me that, so I stuck around. Mm-hmm.
And then, Erika, did you always find yourself in this position with TFA even before they were started? Like, how did you find yourself in your business?
So my background is real estate, mortgage. I've worked for title, escrow, processing.
So you're one of us.
I'm definitely one of you guys.
Nice.
I tried to leave the whole real estate mortgage industry one time, and I went to go work for a law firm, actually down the street from here.
Oh, no way.
Yeah, in Newport Beach. And one day I just realize that I have a lot of working years left in me.
Yeah.
And is this what I want to do for the rest of those working years, is work for somebody else, when I always had a vision of being self-employed and having my own business. And that day was just that epiphany of that, like, okay, yeah, no, I'm not going to be an employee forever. My kids are old enough that I can pursue this, vision that I had. And sure enough, that same day, I happened to see somebody post on social media, on Facebook,
Facebook?
the CEO's post that said multiple streams of income. He did a video on it. And I wasn't even following him. So I clicked on it and I'm like, okay, multiple streams of income. What is that about?
Piqued your interest real quick.
Really quick. So yeah, I reached out to him. I met with him, and he's like, you'd be perfect. You have all this prior experience in financial industry anyways.
Yeah.
So yeah, I got licensed. And once I started reading to get licensed, everything that I didn't know, even though I worked for all these big companies in all my working years, my mind was blown away. That little emoji with the little, with the little brain popping up.
Yeah.
That was me learning about all these things that I had never heard of. Nobody ever told me. The only thing I really ever heard was maybe 401k and having good credit. So that was as far as my financial literacy. 401k.
Yep.
Keep your credit good, which are things that my mother had always told me. Sign up for the 401k, and she would say, and don't fuck up your credit. And she told me, don't ever rent. She never rented
she
even.
Did?
Yeah, she said, and don't ever rent. And of course, I've done those things. I've messed up my credit and I rented.
Yeah.
So I had to learn from those things.
Yeah.
Just life experience in itself.
So your mom was a very wise woman, it sounds like.
Yes.
And she bestowed some key things to live by, even though I know I did the same. My family, my parents recommended I do things in a certain way. I kind of went off the track. But as we get older, we kind of bring that back in. And I wanted to touch upon one of the things that you mentioned, Sarah. When, as minorities, we don't get this information, right? We who knows about life insurance?
Right.
All we know, for the most part, is 3 sentences. Use it when you die. That's kind of what I always hear. And it was not until recently it popped up on social media. So I think with minorities, it's kind of a blind spot because our parents are, coming over, just working, grinding out to make our lives really better and comfortable than theirs. So how did you go ahead and have these conversations once you got in the industry with your parents or your family members or anybody that you may be trying to go ahead and advocate, hey, this is a good move for you guys?
Mm-hmm. For me, I actually still remember the day that I told them I was getting into the industry and I was getting licensed, and I did like a complete, turn going from fitness to finance.
Mm-hmm.
So they were kind of like, what is going on, right? But once I started, like they thought what you just said, like you're gonna just sell life insurance, and so when somebody dies, they'll have that policy and whatnot, right? And it wasn't until I it took a couple of conversations until they finally sat down with me and I showed them. I basically did a presentation on them, like if they were my clients.
Like a formal.
Yeah, let me actually show you what I do and what I'm talking to my clients about and what the policies consist of, what it has, the benefits, how it works. And then, then you can make your assumptions. And once I had that conversation with them, they were like, whoa. And all of a sudden, my mom would, call me or text me like, oh, I talked to so-and-so and I told her about you and you should talk to them and stuff. And that's because it took for me to sit down with her and really explain it to her, right? So that she knows it's not just about dying. You have the living benefits, you have the cash value, you have all these, benefits that comes with owning a life insurance policy. And once my parents knew that, they were going out on their own and trying to send me people, because they were like, oh, so-and-so doesn't know that, so-and-so should have that, right? So, it just takes that conversation that a lot of people, are not wanting to have, or they don't have access to that individual, so.
Eric, was it the same thing for you where the moment you sat down with someone, now all these people that you sat down with became just, they're bringing people to you, or was there a lot of struggles in the beginning? Talk to me about your experience.
I would definitely agree in the beginning when you get into the industry and you just say the word, life insurance. People just think it's for death only.
Yeah.
And also they have it through their employer.
Right.
Right. I already have it. But what they don't understand, is that it doesn't follow you. You leave that job, you get fired, whatever it is, you no longer have that group life insurance policy.
I didn't know that.
Yes,
so
it's
the moment
done.
you get your notice, your pink slip, so to speak, that's done.
That's done.
There's no way to carry
you don't own it.
Oh my God.
It's a group policy.
You guys just taught me something.
Yes. So, that was a quick response from them as well. And then, yes, I think people, they kind of got a bad vibe of the industry from what they've heard. Mm-hmm. So it was kind of like having to follow up and repeat yourself, and maybe even the people that your family and friends won't even be your clients until they've really heard more about the industry or watched you in your own business, maybe years later.
Okay.
Years later. Even my own mother, she didn't even get a policy till, I think last year.
Yeah?
Yes.
Yeah.
So she wanted to watch your growth and your journey.
Exactly.
And see if it was legit, you think?
For sure.
It's like they wanna see it to believe it first. Like, let me see it first.
Yeah.
I've actually had family members come to me not because I reached out to them, but because they heard the information through a friend or a mentor of theirs or somebody they look up to, and then it'll click in their head like, oh, actually, I think my cousin or my niece or whatever, Sarah, I've seen her post, she does this, so I should reach out to her now. But when I reached out, they were like, no, thanks. But because they heard it through somebody else, then now they're coming to me.
Gotcha.
Right.
So.
Or they don't reach out until somebody that they know, had a heart attack or somebody died of some sort of illness. Or now all of a sudden they got some diagnosis when they went to the doctors and they're diagnosed with some sort of whatever, diabetes or a health issue. Then they reach out. And then at this point, you may be uninsurable. So that's a challenge too, when they should have reached out when they were healthy, when they were young.
Isn't it? I hear you loud and clear because personally I've had a couple of things like that myself where family members would get sick and they would reach out for various reasons and it just wouldn't work out. So I think when we talk about frustrations, not just with clients, but just trying to have them be proactive right, versus reactive.
Right.
I think that's such a big thing because we can be at the top of Mount Olympus, so to speak, screaming, "You need to get this," for various reasons, depending on your situation. But it's up to them to receive it, and most of the time, it's always a reaction of, "I went to the doctor," or, someone just passed. Now we got to go ahead and have a car wash.
Yes.
Something like that.
Yes.
And now that I have personal policies, and I'm sure you guys have policies as well, it breaks my heart when I see these things or hear these things where, in many ways, we're frustrated because, like, we told you. Like, no, I'm just kidding.
and you can't say that because then you're not you're being insensitive if you say it. But at the
but
same,
you feel it. I feel it.
Yes. I just tell my friends all the time. I'm like, do not. I'm not contributing to your GoFundMe when you die. You knew about me and my life insurance, so I'm not contributing.
Yeah.
They always laugh like it's funny, but it's not funny. I'm not giving up my money.
Yeah. I mean, it really has to be a special thing for me personally.
Mm-hmm. Yeah, for me, I will contribute to a GoFundMe if it's a child, a baby.
Yep.
I'll do anything for a baby or a child. I don't care what it is. Lay down on the tracks. But an adult who knows better.
Yeah.
You should be insuring your life and protecting your family. Don't say your family is your why and your reason and your number one and oh my gosh. And then
you're not doing the right things.
You don't provide, how are they going to live if you're gone? They're depending on you financially.
Yeah.
Where are they going to go? How are they going to pay the mortgage? How are they going to continue to pay all the bills? Or if they want to go to college, like you're supposed to protect them and provide for them. And the only way to do that if you pass away is if you have, assets, your main asset is your income. So that's gone.
Yep.
So how are you going to replace that? And the easiest way to replace it is a life insurance policy that pays your beneficiaries tax-free.
Yeah.
No brainer.
Right.
Do that.
Yeah. I have something myself, and I've found it to be a peace of mind. Right?
Absolutely.
It's a peace of mind, and I know we're talking about frustrations in regards to certain things, but what are some things that you might have heard from your clients or clients that you still haven't got them to convert over? Sorry for the word convert, but in 70 cases, it's them changing their mind from their employee benefit or their mind. What are some frustrations that some clients have brought to you? Like, is it premiums? What can you share on that?
I know one of the issues I come across, which is actually kind of funny, it's that they say it's too expensive.
Okay.
And I mean, there's a variety of options when it comes to life insurance, but if they just get the basic, term life insurance policy, I've talked to a couple individuals and they're like, okay, well, how much is it, right? And I literally get their age, do you smoke? For let's just say, $250,000 of insurance for 30 years, and they're pretty young, and I tell them right on the spot, okay, it'd be like $16, $20 a month. And I've had people I'm talking over the phone, they're like, oh, what? Like,
so
they're like, wait, repeat that again? Yeah. And they're like, repeat that again? And I'm like, $16. Yeah. If you're rated really healthy, you're young, you're, 20 something years old, like, it's a very small policy. Like, it's very cheap.
So affordable.
And they're like, kind of like, what? Like, this doesn't make sense, right? And I'm like, so I think that's one of the misconceptions we run across is that people expect life insurance to be super expensive and costly. But, we just need to figure out what numbers work best for you. What do you want? And then that's when we're going to find the right amount,
So you hear that, guys? Less than $20. That's probably a week of Starbucks in your hand. Now that provides you, some peace of mind. So thank you for pointing that out. Now people would say expensive. Why do you think they have this automatic thought process of it being unaffordable or expensive?
They see it as a debt.
Okay.
I think it's just like a debt. They're adding it to their, they're not prioritizing what's important to them when this should be, top of mind. You're insuring your life.
Yeah.
Is your life not important? You're paying more for car insurance, I'm sure.
Yeah, especially lately, guys.
Especially, yes. You know, they sell you when you go to purchase a new cell phone, insurance for your phone.
Insurance protection for
yes,
your phone.
And you're like, what? How much? Oh my God, I don't want to add that on there, but okay. You know?
Yeah.
Because the thought of losing your phone or you're going one day without it just kills you.
Yeah.
So it's like,
that's horrible.
It's funny.
It's tragic.
Yeah.
I kind of like that analogy because you're at the store, you need a new phone, and they get you on the spot. And after that, you don't think about it until you need a new phone. And it's almost identical because when I got my policy, and I'm sure the same thing for you guys was, okay, the only thing was go through the process, maybe a couple of days, do the medical screening if it needed. And then it was just, it's over. It's out of my mind.
Right.
It's peace of mind. It's gone. So
it is peace of mind. I mean, I think that every time I travel and I hop on the plane, I always think, I'm like, well, I mean, if this goes down, my kids will be rich. You know, I have life insurance. That's at that moment where I feel peace of mind. And even every time I hop on the plane, I tell the kids, remember, my policies are with this and this, and you know, my policies are here, and you know, I have them here, and I'll send them an email. You know, these are all the policy numbers. These are all my investments. Just because, I mean, it can happen.
Yeah,
it can happen, but I'm okay with it because they'll be fine.
Right.
That's amazing.
I mean, who's going to cook for them? But otherwise, they'll be fine.
I was literally thinking about that. Like, what did they tell you, Mom? Like, Mom, don't tell me that.
Yeah, they just say, "Oh God."
That's funny.
Here we go. I'm like, for reals, it could happen.
Yeah. So we've touched upon, you know, that misconception of unaffordable because less than $20, you nailed it. Is there something where it could be $100 that, you know, might be a little bit more beneficial? Like, is there? I always hear the two terms, whole and term. Could you guys mind just kind of giving me an overview of what that is?
So whole life is a permanent life insurance policy. So you got the permanent and the term policy. So that's basically the two types of policies that you can get. So when you have a term policy, it's like you're renting, right? Renting a house per se, and then permanent, like you're buying. So if you just think about that, renting is typically cheaper. I don't know about right now, right? But typically cheaper than when you're paying a mortgage, right? So that's basically what you got to think of. Okay, a term policy is going to be, you know, a little bit cheaper, and then a permanent policy is going to be more on the expensive side. Why? Because this is permanent. You're owning it. You're building equity in this policy. So you're getting all these benefits that the term policy wouldn't give you. So in that sense, you got to, you know, realize like, okay, yeah, sure, I'm getting all these benefits, so it's going to cost me a little bit more, but it's more beneficial for me long term, right? So that's where people can probably think like, why is it so expensive? I'm like, well, it's not really expensive if you're building equity in this. You're going to access it down the road, and you get the death benefit and living benefits, you know, so.
I like that word that she used, equity. I mean, that's a key word. Who doesn't want equity? If you think about a mortgage, right, you're building equity. That's what you want, right? You can build equity within a cash value life insurance policy. You're growing, you're accumulating cash in there. It's growing for you.
How quickly can you accumulate this cash?
Well, I mean, you want to treat it like a long-term investment.
So it's not something like, hey, next month I need to tap into this. It's more of like, put it away for 5 years.
You can, if that's your goal. If you want to, you know, the term right now on social media is infinite banking, and they're putting money in and taking it out as a loan and putting it back in. Yes, that's a great concept if you're willing to do that and go that strategy. If that's your goal, yes, there's a certain plan for you, and we will strategize it according to your wants, what you want to utilize it for. But if you want it for long term, for maybe a retirement plan for yourself, and you just know you're going to contribute to the policy till you're like 65, then we'll illustrate it to match that. So however, whatever you tell us that you want, these are my goals, this is what I want to use this policy for, then that's how we'll illustrate it.
Okay. So we're touching upon wants and desires of clients. I know myself, from catching wind of, you know, cash value, that was part of the reason why I set up one of my policies, is a way to buy another house, a way to go ahead and fund a business that I have planned out. podcast.
Yeah, that's great.
Things
That's
like
great.
that. What are some common things that you come across that people may want, need, or desire from, insurance?
I would say the living benefits is the biggest, need, because a lot of times I talk to people and they're like, "Oh, well, I'm not going to die anytime soon. I'm healthy. I'm young, or I don't have family members to pass down this death benefit to, or whatever," right? But they are not thinking about, what if you get in a car crash once you leave work right now, or you get diagnosed with cancer, you get a heart attack, stroke, paralysis, coma, anything like that. These are scenarios we don't think about, right? But we all need.
Yeah.
We are all human beings. We all have a time clock, and we don't know our health situation. I don't know if I'm, going to get cancer down the road or not. I don't know if Erika or yourself, right? We don't know these things. So we can't just assume like, this won't happen to me. I don't need the living benefits. You never know. So I think having that backup plan of having the living benefits in the life insurance policy is definitely a need for everyone. I don't care how rich you are, how healthy you think you are, how young you are. You for sure need the living benefits.
That's like the foundation, you would say?
Yes.
Yeah.
So you probably would recommend layers. If someone comes to you and say, what's my basic? That would be the first thing you would recommend?
I would say when it comes to life insurance policy and I sit down with clients, I always focus a lot in the living benefits because to me, it's very important, at least.
Gotcha.
I know a lot of people. Like I said, I work in the I work in the fitness industry. So I've trained clients that have disabilities or, that have gotten sick or, my parents have a lot of medical conditions going on. So it's not like, these things aren't out there. We just are ignorant about them.
Yeah.
So,
Yeah.
I focus a lot on the living benefits because I think it's very important for people to have, even if they don't think it is, I try to put it in.
It's the most affordable, right?
Well, the living benefits is in both policies.
Oh, okay.
So, yeah, it just depends on your, what you can afford.
Okay.
I can give you either.
Yeah, it's an added rider with the insurance policies that the financial architects offers. We're a brokerage, so we have several companies to choose from. So the carriers that we use have that built-in rider for the living benefits, as opposed to like a captive company. They can only offer one policy, and most of them don't offer the living benefits. And the living benefits for me personally is huge. I'm a single income. So if I were to have any of those illnesses, heart attack, stroke, cancer, which are the major causes in America, who's going to pay all my bills?
Not Uncle Sam.
Nobody in my DMs is going to come up with no one.
For sure.
So what happens at that point with the policies that I have, the living benefits, it triggers a qualifying event. Okay, the doctor, sends, I get the doctor's note that I had some sort of stroke. I submit it to the insurance carrier, and they pay me from the death benefit from my policy. So if I have $1 million policy, and I'm going to receive some supplemental income from my policy, sign me up. Sign me up. Even if it was for the $20 premium,
right?
Still, same thing. It doesn't matter.
So you mentioned...
It's locked in.
You mentioned $1 million there. Are you saying that potentially for something, let's not get into the specifics, but something less than $100 could provide you that relief in that scenario?
Absolutely.
Okay. Yes.
Yeah. Okay. They're going to pay you from the death benefit, not from your cash value in the policy.
Okay, so it's a different part of the tree.
Yes. So what happens if I were to, need the income for a year? So I couldn't work for a year, and I used up, $100,000 worth. Then now my policy, the death benefit, just lowers to $900,000 instead of the $1 million, which still goes to my beneficiaries, which I needed the income at that time.
Got you.
And you don't need to pay it back or anything like that.
It's a great benefit.
Wow.
Yes.
So it's even better than a 401k.
Yes.
Oh, well, yeah, you can.
Because
definitely.
most people only want to sit on that until you get taxed on that when it gets taken out.
Yes.
This is a different event where it doesn't seem like that's going to be taken into account.
No.
Wow.
No.
Yeah.
You listen to this, guys? This is quality stuff.
Yeah. Living benefits is huge in our policies, and that's why us as agents, we carry, the policies ourselves.
Mhm.
Yeah.
It's very important for me.
Got it.
And something I want to point out too, since we're speaking about living benefits, when I come across clients too that say, I already have my policy, and I ask them, okay, does your policy have living benefits? Most of the time they don't know because their previous agent probably just didn't explain it well.
Mhm.
But if they do know, they'll say, yes, it does.
Mhm.
And I'll say, okay, cool. Like, so you have, terminal, chronic, and critical injury and illness, right? And they're like, what? Let me check. And I'll have them go and check just to make sure, or they'll send it over to me to look over for them. And 9 times out of 10, they only have the terminal illness rider.
Wow.
So a terminal illness rider qualifies as a living benefit, but then they don't have the other 3.
Yeah.
So just because they have terminal illness, which means you're still going to die, right? They call it, oh, you have living benefits. There you go, right? But then the client doesn't know, okay,
Yeah.
but I only have terminal illness, but now I don't have chronic and critical illness and injury, and they don't realize that, right? So when I've looked up several policies and I'm like, you only have terminal illness.
Yeah.
So I transfer them over or convert them to, a policy that has the same death benefit, same rating, but now you have terminal, critical, and chronic illness.
Just providing more value.
Yes, exactly. Same thing. Payment sometimes is actually less
Yes.
on my side.
Oh, wow.
Yes,
I beat
it's
it.
usually cheaper.
So I actually give them a cheaper premium, and I give them more value.
Do you think
So.
some clients are frustrated that they were misled or not given that information?
I do think that, yeah, they're kind of like, whoa, I didn't know this was available,
Yeah.
right? But sometimes, I guess it just depends on the agent they spoke to. Sometimes the carriers that they have within their company, like Erika said, we're a brokerage, so our carriers that we use, they're all A-rated companies, so we provide a lot of benefits in our policies. And other companies, I don't know, they might have carriers that don't have all the living benefits. They're very limited, they're captive or whatever. And that's just what that agent knows. They don't know anything outside of their company. So I wouldn't say it's their fault, they just don't know. But then when the client comes to me, I can provide more to them.
So you guys have a cup full of tools, whereas some others might just have this much.
Right.
Okay, that makes sense. So we've touched upon, frustrations. We've touched upon some of the desires and wants. For me, with my daughter, she's 7 years old. It's all about being able to go ahead and provide her generational wealth. Is that a common thing that you guys hear from clients as well? Is it maybe someone's set up a policy with you guys, and then they come back to you and say, hey, listen, I want to do a cash value account to do this, and this for maybe a college fund? Or talk to me about any story or time someone may have done something like that.
Go ahead. Yeah.
I think it starts the generational wealth, even that thought process. You have your daughter, and that's probably what triggered.
Yep.
Hey, I need to set
Personally,
something up. Yes, to what am I going to leave her, or provide for her? How am I going to continue to take care of her if I'm no longer here?
Yep.
And that's where generational wealth comes in. That's where you start thinking about it, and your wheels are turning. So you can purchase, and that's what most clients do. They'll start with a term which is affordable, and if something happens that triggers the generational wealth, from that point on, then they'll move to something more. Like, wait a minute, now I heard about something. I want to save for college for my daughter, right? How do you guys offer something? And yeah, that's where we start that. Yes, we have something where you can save money for your daughter for college. And if she doesn't go to college, she can still use it to buy a house, or maybe she wants to buy a business, or whatever she wants, we can provide that as well. It's just a conversation. It's reviewing your financial needs and changes in life. Whether you get married, have children, divorce, have more investments, purchase more real estate, all of those things, you should be talking to your financial advisor and letting them know what you're doing, because there's something else that you can add to your portfolio.
Yeah.
Right.
Love it.
Yeah, I definitely would have wished my parents would have done that for me.
Yeah.
Like I do them all the time for my clients' kids or children. And I'm just looking at the numbers and I'm like, dang, if my parents would have done this for me, I would have had this much money right now.
You'd be on vacation.
Yeah, seriously. I could have. Right. It could have helped me, get a jump start to my business or whatever I wanted to do,
It could be a true trust fund baby.
Mm-hmm.
Hey.
Yes.
We can create trust fund babies.
Exactly.
So that's the craziest thing is that being exposed, as I mentioned earlier, like minorities, I don't want to say we're blind to it. We're just not provided the education.
Right.
The environments that we grew up in, they're not, hey, you need to do this, this, and this. But in more affluent neighborhoods, Irvine, and a few others here, Costa de Casa and others that in the surrounding area, that is a staple. Like parents just have been told as kids, this is what you have, and they pass it down and they set up these policies for their kids. And they just build that generational wealth. I mean, I'm pretty sure that's what the Rothschilds and maybe even the Gateses and, maybe even the Walmart kids are doing as well. So I think it's incumbent upon us to find, partners like ourselves to go ahead and bring this information out to you guys like we're doing now. And also bringing you in a private one-on-one conversation to say, this is affordable. This is going to be maximizing not just your life, but your family's wealth. And even for business owners, I'm kind of blind to that. What are many business owners using policies for?
Sarah had a really good scenario recently. I think she can speak on that one.
Right. Yeah. So I speak to business owners about insuring each other. So when you have a business and you have multiple partners, right? A lot of people don't think. First of all, that's already like you have multiple people, different people want to go left, right, whatever. But what we don't think about is like what happens if one of the partners passes away or becomes ill or disabled. What's going to happen to the business, right? So what you do is you set up a key man insurance policy, right? So it's like, okay, this business owner is a valuable asset to the business. He's a key person in the business, right? Most of the time these business owners, in my scenario for example, they pay themselves, right? Yeah. So they're technically their own employee, right, of their business. So that was my scenario, right? Okay, the owner pays himself, therefore he's employed, right? So so you're an asset to the business. So we need to insure you through the business, and that way if something happens to you, then the death benefit would pay out to the business in case of a loss of the owner.
The continuity.
Right. So that would be a scenario I would say is the most popular in my opinion. Just having a key man policy for, and it doesn't have to be the owner. It could also just be an actual employee. Like you have a manager or your social media marketing guy, and your business just solely depends on that individual. Otherwise, like you don't have revenue coming in, or you just value this individual, you should have a key man insurance policy on that person.
Okay.
Just God forbid something happened to them, then you would get that death benefit to your business.
It would be a big loss to the company without that key employee.
Yes.
That's crazy. What I think of, because I've been in sports my whole life, and there's been a lot more talk about, these high school kids that are going to college, and then they have not just aspirations, but it's almost like a guarantee for them to be in the NFL. I hear a lot of times that they have insurance as well to protect against any losses, or if they get hurt and they don't go first round, that they have some kind of money guaranteed because of some insurance policy or something. So I think that is key, because I know personally a good friend of mine, Petey, he has some great producers, and the company couldn't really operate as well and fluid without him and some of the key producers. So it's something I'm going to be talking to him about, probably watching this. So expect a call from one of these two.
Yeah.
And but yeah, I think that even with business, I think that's not something that's talked about at all, right?
Right.
Is that like what was the term you said?
It was a key man insurance policy.
Key man.
Yes.
Okay.
Like who's your key man in your business? Whether it be a vested business owner or a key employee.
Right.
Maybe you've had them there for years and your business can't run without them.
Got it.
It'd be a huge loss to you to replace them.
Got it.
So at least this will supplement, their position in the company for a little while.
Okay. It's a stabilizer.
Yes, that's a great terminology. Yes.
It's a stabilizer.
Yes.
So when we deal with passing, death, all that, it kind of throws us all in a flux. In a business, that you lose a key employee, it's like, oh, well, he was generating over $100,000 a month, and if he's gone, what am I going to do? Now my business is taking not only a 10% loss, but more of maybe 40%.
Right.
That can impact how I'm paying other people.
Exactly.
Yes.
And
Okay.
not to mention, what if this key employee of yours, say it's your brother is the other business owner of a tire shop or something, and if he passes away, what if his spouse comes to you and she's dependent on that your brother's income? So if you had the key man policy, at least you can pay her, what is due to her.
Yeah.
And that can be said in the buy-sell agreement, that you sit down with an attorney and you create a buy-sell agreement that coincides with the key man policy.
Okay.
But, it's not something that you think of. Like, that spouse is going to come to you and want her portion of the business.
Yeah, that's for sure.
And that could take down your company in itself.
I've personally seen some scenarios and been involved in scenarios like that, and it's never clean. It's always ugly.
Yes.
So this would help.
Absolutely.
That's a great nugget right there, guys. That's something needs to be explored and talked about more. So thank you so much for bringing that up.
Yeah.
One last thing I wanted to talk to you guys about that I've noticed on both your guys' social media is pretty active is trusts. How are trusts utilized? How are you guys advocating and dive in?
So a living trust, I would say, is along with a life insurance policy, is the up there, right? For a family member, individual to have. You have a life insurance policy that's going to pay out the death benefit to your family and whatnot, but then you also have assets, right? These don't go into a life insurance policy. So what's going to hold these properties, all these other, assets that you want to pass down to your family? That would be a living trust, right?
Okay.
So putting all your wealth, everything that you want to pass down to your children, that would be, setting up a living trust, not just a will. So that's something that Erika and I have been very successful at doing the past, couple of months.
Mm-hmm.
So, yeah.
Yeah, we've really been pushing the trust because we've been hearing, now that we've been bringing up the trust, now people are coming to us with their situation, something that happened to them. Yeah. We hear that their family's property went into probate.
Right.
It's terrible.
They had to pay a ton of money that they couldn't afford to pay, the attorney's fees, all these fees, when they're in regret that there was no trust in place, when it would have been more affordable for them to protect the assets and the property if they would have had the trust in place.
Yeah, I deal with trust in the sense of when things go bad. On my side of things, I'm sure you know, because since you've been in the industry a long time, and many times that people do have a living trust in place, it makes things very easy for me. Okay, so who is the, what is it? What's their name?
Successor trustee.
Exactly.
Yeah.
Well, they kind of been the go-to person to speak to of how everything's going to be handled. Are we selling this property, or we need to go ahead and provide this amount of money from the liquid assets or the stocks or whatever was held to that person? Makes it easy. When you don't, I actually have a friend, his father passed. Still to this day, it's been over 5 years, where the house is kind of in probate, and they still have ownership of the house, but the mom is older. She doesn't want to take ownership of it. So that might be something I need to introduce you to, in that sense, because it's creating an umbrella, right? It's creating an umbrella of protection when it rains. Mm-hmm. Yes?
Yeah.
I think that's kind of how I conceptualize it. Is that a good
analogy? Yeah. And family members, you think, well, say there's brothers and sisters, that everybody's going to agree to something when the parents pass away. They definitely don't. Yep. When money comes into play, nobody agrees.
I was there. I took care of my mom.
Yes.
Where were you? Like, guarantee it's always that.
And what if there's a blended family?
Oh.
That's a big mess.
Even more complicated.
That's a huge mess.
Yeah.
And that's something nobody thinks about. There's a blended family. There's kids on both ends. So if you had the living trust in place, you can decide prior to your passing how the assets are going to be divided up and who gets what and who's disinherited and when You can
that
say
happens.
all those.
We've had that. We've had that.
You can create it so when you pass away, it's as if you're still here and you're calling the shots. Like, nope, I said.
Yeah.
Right.
So
you're that ghost that's still governing. It's
exactly, and everybody can fight all they want, but it's already in place. It's like a contract. This is what my parents' living trust says, and this is how it's going to work. No ifs, ands, or buts.
So that's personally, I'm lagging to get my living trust, guys. So
Don't feel bad. It's the percentage of people who have living trust is very, very small. So it's.
Would you say it's less than 40%?
Yes.
I think so.
What did we see on that? Didn't we see recently what the percentage is?
Probably 36.
Yeah, I think it was very low.
It's a low percentage of Americans, homeowners that
Oh my God.
have a living trust in place. And so and it's funny because then, people in title, they see all the new homeowners all the time. And it's just, it keeps adding on every day, but the living trust is like nobody's getting a living trust, so that's like the first thing that they should do as soon as they purchase a home. It's like, okay, I need to establish a living trust so I can protect this home.
Right. And it's our job being in financial services to offer the living trust.
Right.
We wouldn't be doing our due diligence if when we ask all the financial questions when we're sitting in front of a client and we see that they have assets, real estate, a family, children, whatever it may be, even the health directives are included in the trust. Like, what do you want to prolong your life if you were to be in a coma? Do you want to donate your organs?
Yeah,
all of these questions are in the living trust. So we wouldn't be, we have to offer it to them and tell them what's included and what it would protect. And, it's for their family and their legacy as well.
Yeah.
So we try and put that out there. That's why Sarah and I have been really trying to push it on our social media. Like, get a living trust. Thank you. Thank you.
You guys have been. And I think that's what caught my attention. And I knew immediately that you guys were going to be able to provide value, not only to what you guys are doing on your social media, but through what I'm potentially trying to do as well. So I'm so thankful for you guys to come on today, share these great tips, these great opportunities. And guys, listen, I'm not a gatekeeper, so I'm going to make sure to tag them, and please feel free to reach out to them. And if you guys want their numbers, we'll post that up. I'm just kidding. But we'll go ahead and make sure that you have access to them. And it's all about creating a community that makes sense for people who are not aware, that need more exposure to this. So I thank you both for coming today. I think we covered a lot. I don't know about you, but I'm parched.
Thank you.
Yeah,
And
we did cover a lot.
We'll do another one.
Yes.
And we'll dive into some more maybe specifics next time.
Okay.
Maybe when I do another policy with you guys.
Let's do that because I feel like we covered a lot, but at the same time I feel like I still have so much more to say, right? Like I need to.
We can talk about it forever. Yes, we can talk about it forever if you're willing to listen.
Oh, you guys have to listen.
It's not a sexy conversation, but it's a such needed conversation. I think so. But I like nerdy stuff, so.
Okay. Well, guys, thank you so much for tuning in today. In Between the Tees on the First Tee, my special guest today, and we look forward to seeing you again. Have a good day.
Bye, guys.
Bye.